Well, it looks like Santa Claus hit a little turbulence going back to the North Pole, thus a 4-day losing streak in the S&P 500 index futures. Now getting some good news, some warnings coming out of the EV area, Mobileye. We'll talk about that. We'll talk about some drug stocks, Abbvie, Lilly, CVS, Walgreens, Boots Alliance having earnings. Mark Chaikin, back-to-back appearances on a Thursday. It is Thursday. It's Joel. It's Dennis. It's Aaron. It's pre-market prep. Let's get things started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders and investors. Starting the day out in the green after a 4-day losing streak, up nearly 3 handles at 47.49 and a quarter. The buck back off par, but down 15 cents at 102.404. Bonds down nearly a stick at 123 and 10/30 seconds. Crude hanging out in the low 70. Ooh, I got a trend line there in crude. Crude up 29 cents at 72.99. Gold up nearly $10 at the 2053 area. Silver flat 23.16. Bitcoin futures, they're waiting for the big day. I guess it's January 15th. That's up $605 at 43,685. Let's bring in Triple D and Triple D. Let's just get the sports talk out of the way right away. I know it was Monday night, but holy mackerel. I have to say, out of my favorite plays, old time in Michigan history, the Desmond Howard punt return against Ohio State in 92, the Charles Woodson punt return against Ohio State in 97, that final play where Michigan stopped Alabama. I wanted to run that play on 4th and goal. That had to be one of my favorite plays of all time.
Congratulations, Joel. Obviously, huge night for you. Huge night for Michigan sports. Huge night coming next week for Michigan sports here. Impressive win. Again, nothing's better than when your sports team's winning. I mean, if you're a hardcore fan, like not a bandwagon fan, talking about the hardcore fans that suffer for all the years of agony, watching crappy teams. When your team turns around, they start winning. It feels like nothing's better than that. So congrats.
Okay. So just real quick programming note. I'll be out Monday and Tuesday because I'm going to Houston. So I'll get the market up the next couple days and then going to the Natty Championships. But holy mackerel. Yeah. I come back and we got a lot of stuff.
We need you here.
Yeah, let's bring in AB. AB, how you doing? Were you able to put up with Dennis for a couple days?
Yeah, I think we actually, against all odds, I think survived okay. But it's good to have you back, Joel, and it's been fun to be here every morning with everyone in the chat, Dennis and everyone else. So just thanks. Can't express my gratitude enough for letting you guys or for letting me come on.
So what was the over-under on how much you talked in the hour during the show? Was it over 5 minutes or under 5 minutes?
Oh, it was definitely.
You can't come back and just start picking on me right away.
No, it was definitely over. Definitely over. Definitely over. It was pretty.
It's always picking on me.
Yeah, it was at least got to be, I would say, 60-40.
Wow, that's pretty good.
I'll short that. Okay. Anyways, take it away, AB.
All right, well, let's go ahead and start this morning with Mobileye. Mobileye gave a revenue warning and stock absolutely crushed this morning. Ticker MBLY. Of course, this is a EV company spinoff of from Intel. Now, other software stocks looks like they might be kind of trading down on this, but either way, I mean, if you're long like growth techie stocks right now, I feel like you got to start getting a little bit worried that, hey, maybe, this year's market's looking a lot different than what we were looking at a few months ago.
If you're long a bunch of growthy techie stocks in your short-term portfolio, you haven't been listening to pre-market prep, because we've been warning about this rug pull here for every day in December. We thought when the calendar turned that it was going to be a tough run for the Magnificent Seven, and potentially a tough run for tech. I think we can still have more of a pullback here. We've got, obviously, we can jump in here. Let's do the Mobileye stuff first. So they come out with a warning here, guidance out of the blue too. So you never like these guidance cuts just out of the blue. And like I was calling this market did not need this morning. We needed a little bit of a lift. Not that Mobileye is a market mover, but Mobileye, when it is warning by this much, and let's just give it some context here, they're talking about sales being down 50% in the quarter. That's a warning. It's not like, oh yeah, down 10%. Sees Q1 revenue down 50%, 50. They will absolutely murder any stock that says that. So it's down 25%, deserved. I mean, revenue falling 50% a quarter, they got problems here. This Intel spinoff not looking that great this morning.
Yeah.
Holy mackerel. Anyways, street leaning the right way. I mean, I didn't get the memo. Dennis didn't get the memo, but look at this thing. Straight down the last 4 sessions from $44 to under 40, right? So, oh boy, a lot of selling going into it. Hard to give you just to call it on a dime and say we're going to turn. I just like this 29.50 area. Our pre-market low comes in at 29.15. You have a monthly low right in this area. Big windfall for everyone that's been short the stock here. So I don't know if today, if you want to strike the first day, I'd just be keeping over the next couple days, really be focusing on this 29.50 area. See if you can get some kind of sustained bid. That's looking at it technically. And then Intel was over $50 before I left. And I'm like, what the hell is Intel doing up over $50? And the still owns a big chunk of this. Intel getting hit and down at the $45 area, absolutely in no man's land here. I know Triple D has a little bit to say about Intel.
I mean, so this morning, just to give you perspective on what I think of Intel, I have 2 computers I'm down to. I used to have 3 trading, but I've consolidated into 2. I have my main trading computer is on an AMD processor, and this side computer that I run the show on is a 1-year-old computer on an Intel the i7, is it? The 7 one or whatever. Same chip they had like 10 years ago. It's still their main chip. Anyways, it just froze up this morning for like no reason. 20 minutes to reboot it. I'm like, it's 1 year old. I'm just at this point now where I was always Intel inside. I watched those commercials as a young kid all those years. I think I'm done with Intel chips. I think I'm completely done with them. I think I'm just going to buy AMD going forward, because you know what? This computer, after 1 year, has just been acting up. I think these Intel chips just aren't nearly as good as the AMD stuff. So they got to figure it out. But that's, not why Intel is down here this morning. Intel is down because it still owns a huge chunk of Mobileye, over 80% of it. So when Mobileye is down 26%, Intel is going to take a haircut as well. That is what we are seeing this morning. But it's not just Intel. You can also look at all the other chip stocks going down here. Analog Devices, ADI is down $6. Texas Instruments is trading down $3 here this morning. They got to fix these 8 o'clock prints, because if you look at Texas Instruments, you're like, what are you talking about, Dennis? It's trading flat. No, it's not. These are these 8 o'clock prints that come on and screw up all the trade or all the pre-market quotes. So I don't know what these are. Again, we've talked to, we've obviously mentioned before that regulators need to figure out that FINRA, just don't classify everything as FINRA. It's half the trades. We need to start getting more color here. But these 8 o'clock prints that change the price aren't the prints. They're late reports. I don't know why they report all at 8 o'clock, but for whatever reason, they screw up your quotes. Texas Instruments is not flat right now. Texas Instruments is trading down over $3. It's offered down over $3 here in the pre-market. It was actually trading down $4 just a few minutes ago here. So you can see it's a little bit of a chip wreck here this morning.
Yep. So tech, like we said on the Mobileye news, a lot of these chip stocks trading down. Let's transition into, healthcare has been trading pretty well this year. We had a couple different headlines in the healthcare space this morning. Eli Lilly. Last year, guys, Ozempic had to be probably the number 2 biggest storyline of the year, behind, of course, AI and ChatGPT. But Eli Lilly announcing Lilly Direct, a website where people can go to get their weight loss drugs directly from Eli Lilly, so they don't have to go through a third party. Stock has been traded up on the news, and right now, I mean, I was looking at some other stocks that could be impacted by this. Weight Watchers WW, or excuse me, it's not called Weight Watchers anymore; it's just WW. Trading lower because that was, some people were buying this stock because they were thinking, okay, people are going to use WW to get their weight loss drugs. But either way, what do you guys think about this? Eli Lilly saying, hey, let's cut out the middleman. Let's go direct to consumer.
I mean, that's what Nike has talked about doing for a long time too, and maybe they do that. Maybe they go direct to consumer. This stock has really gotten a lift here this year, and maybe it's the anti-tech movement, and they're looking for the storied stock of 2024, which Lilly's going to be a story. We know they got the weight loss drug coming here. 580 to 620 though in 2 days when the absolute other market's getting wrecked. But it has benefited from this move into healthcare stocks. This is not just Lilly that has been moving up. We know Marc has been moving up. Look at the parabolic move in Marc from 108 to 114, and that is a parabolic move for this kind of stock.
For Marc,
it typically moves 50 cents a day. So a $6 move, it's a big move. Abbvie was having a huge move here too. It's down here today, which we'll talk about in a second because they got some news with CVS. But overall, Pfizer, Bristol Myers, drugs are cool again. Drugs are cool again. I did add one drug stock just to go off this Lilly for a second, then we'll bring it all back in. I added Amgen to my long-term portfolio yesterday because I was looking at it. I'm like, the PE is reasonable. They have a weight loss drug that they're working on here too. I saw what happened with Lilly last year, just blasting off. If this Amgen drug gets any type of traction, that multiple could expand as well, because you're looking just comparatively speaking. You know how I like to compare everything, the pairs trader that I am. But you look at a Lilly PE, which is just absolutely astronomical now because they bought it up that high, trading 50 times forward earnings, 111 times current earnings. And then you look at Amgen, which is working on a weight loss drug too. It may not be the Lilly drug, but we don't know that it's not. And the forward PE on Amgen is 15. So it's trading under a market multiple. And I think you get that upside look that maybe, this weight loss drug, which is early in its trials, it's not as far along as Lilly's, but if it starts to get traction, this Amgen drug, and it's looked so far so good, there could be some multiple expansion here too. So I like Amgen. We talked about it on the show last couple days. I finally just put it in the long-term portfolio yesterday. So just, adjusting a bit, moving from, some other stocks. And, I've had some cash. You guys know I raised a lot of cash. I'm putting a little bit that back to work, but not in tech.
Very interesting move. Lilly, we talk about the leaders to laggers trade. This is one stock, one sector that has really shrugged that off, and for a lot of different reasons. I'm looking at this move from 580 up to nearly the all-time high. It's a big move. It's, based on them having a website. Also, they are suing some other companies that were coming up with fake drugs. So I feel this is great news. It's a great lift. I wouldn't buy the stock off this news. And if I was a long-term holder, I'll be looking at this all-time high at 629.97. Be looking at this whole 625 to 630 area as a potential sell area. Of course, you bust out, you make a new all-time high. It's a whole different story. But, man, if you were looking at this even last week at 570, now you're up near 630. Could be a good selling opportunity. Certainly not buying. 629. That's your pre-market high. You're a little over $2 off that. Very important to take out the pre-market high in Lilly. Let's see, 815. We covered a lot of stocks there. Do we have Mr. Chaikin, or should we go to the Abbvie technicals?
I think we have Chaikin.
We do have Mr. Chaikin hanging out backstage.
Let's bring him in here, and we can always come back to this conversation here too with Abbvie, or maybe Mark Chaikin wants to talk the drug stocks, because you know what? I bet some of these are showing up in the Mark Chaikin indicators.
All right, let's go ahead and bring Mr. Chaikin on the stream. Mark, how you doing this morning?
Good. Happy New Year, guys.
What a change, Mark, from where we were at the end of 2023 to where we are now in 2024. Quick sell-off here. But is this, and I was predicting a sell-off in early January. We are getting that here. Is this another dip to buy, or is this the start of something bigger? I want the Mark Chaikin thoughts here on this.
Not the start of something bigger. Could be the start of something bigger in tech, but I'm keying on the fact that this is the year of the other 493 stocks in the
Right.
S&P, other market caps, so small and mid cap. And interestingly, on the first trading day of the year, there were a few more stocks up than down, even though the market was down 1% in the popular averages. So I think the drugs are definitely starting to show up in the power gauge rating. The power gauge rating on Pfizer turned bullish 2 days ago.
Ooh.
I would definitely be a seller of Lilly here. The stock's trading at 100 times earnings, guys.
I know.
Come on.
It's crazy.
You know,
What do you
and
think? So I was just giving an argument. I put Amgen in my long-term portfolio yesterday, looking
beautiful.
at Amgen versus Lilly, saying, hey, Lilly doubled last year, all multiple expansion on the excitement for their weight loss drug. And then you have Amgen sitting at an all-time high right now. It's still trading 15 to 16 times forward earnings. I'm like, man, if they just get a little bit excited, Amgen could maybe do something this year.
I'd much rather own Amgen. It's been bullish in the power gauge for 5 months. So we've been leaning favorably. It was one of the only drug stocks and large biotech that had a bullish rating. Now the others are joining in. So I think healthcare is okay in an election year, but wouldn't be my favorite group. But you got to have some exposure. To me, it's industrials, it's consumer discretionary, financials, materials, and very selectively lesser name tech stocks.
We're on the line with Mark Chaikin of Chaikin Analytics. He usually joins us every 2 weeks, but we're getting him in back-to-back week appearances here. Yeah, because of the important time of the year. But Mark, I was gone for a couple days. I come back. We've had a 4-day sell-off, and I like to look. You know how I like to drill in on my daily levels, and there's not much here. I mean, yesterday's low held in the pre-market trading. I'm looking at the 4-day losing streak. We're trading into green here a little bit so far this morning. But man, I don't see anything in there until under 4,700. This is basis the S&P 500 index futures, and the low that I'm talking about was the low that we made on Fed Day. So to me, we really need to hold in here, or we got another 50 handles on the downside. What are you looking at, Mark?
Well, pretty much the same thing. 4,700 on the S&P cash is the 21-day average. We haven't even come close to that since the market started to rally in late October. So that's, we could find support there, or we could dip down all the way to 4,650, which is more likely. So in strong rallies, in the big averages, always look for declines of 1.5% to 3% over 1.5 to 3 days. And, we're testing the outer limits of this because of how strong the melt up was at year end. So 4,650 would be a spot where I would start aggressively buying in intermediate accounts. And so I think you've pretty much got it nailed this time, Joel.
Okay. All right. And then also the complexion of the market changes now a little bit, right? Like who wanted to sell at the end of the year, even though people did sell at the end of the year, right? So now things kind of change. The complexion of the market changes because you have people in doubt, like, oh, we got over 4,800. We got the 48.30 and change, or actually, I think 48.41 was a double top there. What does the cash or the futures have to do to just say, hey, man, party's still going strong here. We're bouncing 47.40. We're back 4,800, 4,900, 5,000 off this rally. What are you looking at on the upside?
Well, the backdrop suggests that you'll do that and more sometime in the course of the first half. But the indicator that sums it up best for me is the McClellan Summation Index. It got over 1,000, and it's based on the McClellan Oscillator advanced declines on a exponential average basis. That only gets over 1,000 at the beginning of bull markets, not in bear markets, and not at the end of anything. So that's telling you that there's a lot more upside. It sort of summarizes Summation Index. It summarizes the mood of the market and the flow of funds into stocks. In the S&P 500, the Summation Index went to a level it's only seen one other time. And in this case, you can't take a contrarian view to that. You got to look for the opportunities to get into the market if you took profits so you're with the trend. The question then is what stocks? And as I said, financials, industrials, a different list of stocks than the tech names that drove it last year.
What other sectors? So we can go, financials, industrials. You said you liked healthcare here. Is there any specific names, jumping into these, or do you want to jump into a different sector?
Well,
Give us a couple Mark Chaikin picks, because you usually giving us a couple picks.
Well, I'll give you one mid-cap name that I really like and have for quite a while. That's Boise Cascade. They support the building industry with pre-pressured and prefab wallboard. And here's a sleeper for you, Triple M.
Oh,
wow. That is a stock that has been hated, it feels like, forever.
Look at the chart on that and look at the previous double top in the 200 area, 2019 and 2022. You had a double top, and the stock's trading with a 5.5% yield at 110. A lot of upside.
Yeah, cheap multiple. The reason it does trade down is they're still worried about this earplug lawsuit. They think they're going to settle, and then they're going to settle, and then they're not going to settle. And saga has just been going on forever. But they have actually traded 3M down to a PE of 11 here now, which is probably as low of a PE as that thing has maybe traded with in a long time.
And they always come up with something like a Post-its note, some innovative product that drives the top line revenue. So that's for very conservative accounts. That's a stock you can hold for a year and not look back every 20 minutes. But on the more speculative side, retailers like Kohl's, the Macy's deal sort of gives us a clue as to the mind of the market. They bought Macy's more for the real estate than for the retail. Yeah. And there are others like Kohl's and some specialty retailers that I think should be in portfolios. Last year it was clearly tech, but you still could make money outside of tech. If you followed the power gauge, meaning you followed the fundamentals and the Wall Street analysts, which is basically what the power gauge does. And I think you're going to see similar opportunities. Mortgage rates coming down are starting to see pick up in mortgage activity, and that opens up a whole panoply of stocks from Mohawk and Carpets and Whirlpool to some of the builders if they ever pull back, the home builders. So. And stocks like BLDR and BLD that supply these industry leaders are stocks you should be looking to buy on pullbacks. They all did well toward the end of the year, and they'll pull back.
Mark, I just want to ask you real quick here about the Triple M. Just getting your technical take. I know I see the monthly bottom here, and the monthly's absolutely looking horrible. Where's your signet? Where's your point? I know you like to buy stuff on weakness and accumulate it. I mean, here I'm looking, you've already taken out last month's high. When do you think things really get started on the upside here? I see a monthly high at 113, room up to there. What technically, I know you looked at your fundamentals, but looking at this monthly chart here, what would you say? Okay, baby, we're ready. We're ready. We're ready to go to 120.
Well, you take out the high in July. That's the one, the 113. But I think you don't want to wait for that, and you're getting paid a big dividend to sit there and watch this percolate over the next 12 months. But again, there'll be more exciting names. But to me, this is
boring is better.
Yeah, well, especially in a market where tech is so overextended.
Let's talk about tech. So, obviously you've looked at these sectors. Do you think this is going to be a reverse year where there's all these other sectors that really underperformed in 2023 are going to be the sectors of 2024, and tech could actually have a rough year? Or is this just a temporary pullback here? Because, bringing even Apple into the conversation, we got 2 downgrades in Apple in the first 3 trading days of the year. So the analyst community seems to be cooling on Apple. I've cooled on Apple a long time ago, but it's still hanging out up here at 30 times earnings. Thoughts on Apple and then just tech overall before we let you go?
Apple, I don't really have a strong feel on the fundamentals. The downgrade was based from Barclays was based on the notion of weakness in the cell phone market in China. That anybody can game that is a better man than I am, but I do think there's going to continue to be big demand for chips because of AI. So, uh, but I don't think you necessarily have to be in the chip stocks. I am looking for pullbacks in stocks like ServiceNow, which will benefit from AI in their business. Um, Love the cyber stocks. So Palo Alto Networks, I think at the right price is going to be a good performer. And it's very selective this year. Last year it was not. You could just throw a dart on a software stock and come up with a winner. And I think it's going to be much more selective. But anything that speeds up. So Arista Networks, which was one of our top 10 stocks for 2023, is still looking good. It's obviously up almost 100% in a year, but on the right pullback at the right price, maybe down a little more from the oversold buy we're looking at right now on a short-term basis. Anything that speeds up data flows and anything that uses AI to improve their productivity in their core business, which is what ServiceNow is doing. I think is still going to be okay. The core chip stocks, maybe not.
Mark, so about a year and a half ago when all tech stocks, the Magnificent Seven, were lagging and struggling, we saw Apple, Google, et cetera, get down to actually some pretty reasonable valuations in terms of theirs. Would you be waiting for something like that, or is there anything on like the macro level that would get you bullish on these stocks again? I'm talking about the Mag 7 here, or you think basically all year those are going to continue to lag and you'd rather be looking at other names?
Well, I'd rather be looking at other names. They're not going to get down to those levels, in my view, in a bull market. And I think that, everything is pointing toward a choppy first half and then a strong finish. And that's typical of an election year. So we've got a lot going for us in terms of historical patterns with the various momentum breakouts. The question is, how low do the tech stocks get? They're approaching levels of support that you'd rather not see them break. So I'm looking at a Microsoft, for instance, which has been a quiet 50% gainer in 2023. They're not going to get to those valuation levels, in my view. And I still love Amazon. Where do you see the Christmas numbers for Amazon?
All right, so there you go. So Amazon would be your kind of favorite out of those, and watching Microsoft as well. Well, Mark, thanks for hopping on Pre-Market Prep. Anything you want to leave us with?
Are you our official new producer for 2024?
Well, I won't go that far, but I'm here for now, and that's what matters.
Oh, congratulations. That's great. Fresh face, a fresh voice, and good luck on it.
Yeah.
All right. Thanks, Mark. We're going into the jobless claims right here at 8:30. Thanks again, Mark. We'll dial you up in a couple of weeks. Triple D, I don't know if you're going wide here. Initial jobless claims are about to come out. Not a huge number. We'll be waiting for the unemployment data tomorrow. I'm not even going to the 1-minute chart here because I don't think it's going to have that much of an impact.
It's not
we
moving
shall
yet.
see.
We're getting the number right now.
So the expectation, the estimate is for 219,000 initial jobless claims. This is slightly higher than last week, was 218,000. But what's significant is if it is higher than last week's, it would be the third week in a row that initial jobless claims rise. And so if it does come in higher than expected, it's hard to imagine that that's not a sign of somewhat of a slowing economy if initial jobless claims
202,000 versus 219,000.
Oh, so it came in low. It came in
here. We're slightly lower on the initial jobless claims. Again, that's still looking and saying, hey, this economy is still humming along here. We're not like all of a sudden losing jobs. And a lot of people believe the Fed will not start lowering rates significantly until we actually see some weakness in the jobs market. This number is not that number.
Not much movement here. We know the numbers coming out tomorrow, right? The jobs number, but I mean, right now we're just humming along here, right? We did have a lot of layoffs, right? In 2023, we haven't really seen the trickle down effect from it yet, but so far so good in recession land here. S&P's barely budging, trying to hold on to unchanged here at 47, 46.50. In fact, we just ticked that. right now. Pre-market low is 43 and a quarter. Right there at Wednesday's low. That's the big number on the to hold if you're looking for a rally back to 4,800.
Just looking and just trying to give perspective here too is the one thing to consider is that interest rates are still high. So I mean, we can say, yep, the Fed's going to propel this market back up to new highs, but it's not immediately happening. These rate cuts here. We're talking about 3 rate cuts through the year. Even if we got 3/4 point rate cuts, the rates are still historically high. And this is why certain sectors I would just completely avoid, like automotive, especially after the Mobileye numbers here. Even I would just completely avoid automotive stocks. And I don't understand who is going to have the money to come in and buy all these new cars. Like, I know everybody gets excited because they see Ford or General Motors trading with PEs of 6 and 7, but they're trading with those PEs, those low PEs, for a reason, is that it's going to be a more challenging 2024 for these companies. The interest rates when you're financing these cars is 7% on the cheap end, really. Like, that's where, when you get down, like 7% is really where, like, if you've got good credit, that's probably as good as it's going to get. I was talking to somebody else that, obviously car salesman. And in some cases, when we've got some other buyers, interest rates are well into the double digits. So, I mean, and then you think about the sticker prices of the cars and how much higher it is. There's just going to be difficulty for people to go out and afford to buy new cars. So that's why I stay away from all of them. GM, Ford, and I'm staying away from Tesla too for that reason here too. I think there's just going to be less people buying cars in 2024. It's an easy thing to just push off. Like, we were thinking, oh, we need a new car. Well, let's just, drive our other car for another year. When you've got, free money, everybody's going and just buying new cars and just, going. But I think, even my own perspective here, my cars are getting older, 2017, 2018. Usually I trade them in every 5 to 6 years. I'm not even thinking about doing that this year. One, I don't want to go buy in Canada $100,000 pickup because that's what they are in Canada. They obviously got to work the exchange rate in there, but I just think less buyers for those big ticket items. So little stuff still gonna, be fine. We know Apple people find money to buy their iPhones, and we'll bring this conversation back into Apple for a second. But Joel, I just want to get your thoughts on the technicals in General Motors and Ford, because they've had a hell of a rally.
They
I mean,
have.
the GM has went from 26 to 36. So that's all on interest rates potentially going down. And that will help those companies. But that doesn't mean just because they're potentially going down doesn't mean they've already gone down. I think, after watching Mobileye's earnings here this morning, or Mobileye's warning here, I'm just concerned that this, automotive sector is maybe going to be the sector to avoid in 2024.
What happened with Laura's transmission?
Oh, still trying to get effects. So we got a Pacifica 2017, which has been basically a piece of junk. Again, maybe you shouldn't just buy, the first, run, but anyways, just go to drive it a week ago and it won't go into gear. Like, it just, like, this car started, it says start the car. It doesn't even know the car started. So finally, take it in. They look it all over. Apparently there's a short in the wiring harness, and there's also 2 sensors that are out. So because there's 10,000 sensors on these cars, the sensor that's telling the car is started isn't telling it that the car is started. So this harness, there's a sensor to tell to make, everything go.
Man.
And that one sensor that's letting you know that the car is started is not working. So they have to not only change those 2 sensors that are out, they got to change the wiring harness too. Guess how much that fix was for a wiring harness, which is a wire and a couple of sensors. Guess how much the fix is?
1,500.
Oh my gosh, you're right on the money almost, Joe. It's $1,470
Yeah,
Canadian,
okay.
though. Canadian.
Oh, yeah. I
So
was
like
thinking-
$1,200. And I'm like, really? For a wire? They're like, well, it's very labor intensive. So I'm like, I don't know. Anyways, what do you do? I'm like, I gotta drive the car. So you hope that's the problem. They hope that's the problem. And they could change all this thing. And why is it shorting out in the first place is what I was asking. You got this wire harness that's got a short in it. Well, why did it short out? Should we dig deeper? Maybe I don't want to dig deeper. I just want to drive the car. But
When you,
people saying buy a Toyota or a Honda, I'm starting to think that. I've always been a big 3. Windsor, Detroit, we're big 3, right? So I've always been big 3. I've always driven a Ford truck. I've always driven Chrysler or Ford products or General Motors products. Mainly Ford products is what I've always been buying, but this is obviously a Chrysler Pacifica. But part of me is starting to think maybe I do have to go foreign if they're going to continue. And maybe I'm wrong, but people in the chat are saying Toyota or Hondas run forever. Maybe I should get something that runs forever if cars are going to continue to be this expensive.
When you texted me about the transmission, I was just thinking like the transmission just sitting on your driveway, like detached from your car. But that's glad to hear that. You asked me about GM, and GM got that boost. That the earnings were not going to get hit as much as they thought from the raising the wages and everything. And it's been one heck of a rally here. I just don't like the way it's losing steam here at the $36 area. So I'm not going to call the rally over, right now. But look at all someone's hawking 36 here. Look at all those highs from 36 to 36, what 30, something like that, 36.43. When you see that kind of formation, that means a big boy is peeling out at 36. They're not just showing 5 million to sell 36. They're getting a little bit above, and they're coming in and peppering it. They let it do it again. So now you're up 32 cents this morning on halfway decent volume. So I'll be keeping a real close eye on this 36 area on the upside. And if any chance you lose 34.55, that was your low from December 14th, then I think you got, easily fill the gap at 34. But really, I mean, the way the market has sold off the last couple days, I think GM's held up pretty well. But look what the
The
stock did
GM
in
upgraded today
23.
too. Just before you leave the
Really?
GM conversation, Wolf Research is
Oh, I
upgrading General
wondered.
Motors this
Yep.
morning. That is why it's trading up 32 cents here in the pre-market. We get Ford numbers here this morning as well, though. Ford sales numbers here, so that can move obviously all the automotive stocks here. So we'll wait for those. Those usually drop around 9:15. So we'll wait for those Ford numbers here. So you got Wolf Research upgrading. I think they're late to the party. We've had the move from 26 to 36. I believe this analyst is wrong. So, and obviously I don't know anything. But at this point in time, I just think buying automotives after they've had this big run, and it has been a pretty big run, I think you're late to the party. And I feel like that was the November, December buy everything market. And I don't think you want to own automotives in 2024. That's my long-term outlook. Short-term, who knows?
Yeah, shout out Adam Jonas, an analyst over at JP Morgan, was getting bullish on these stocks during the strikes when no one else wanted to own them, and the
Oh,
executives.
wait a second. Not only Adam Jonas, okay. I was bullish these stocks during the
Okay,
strike.
Joel
So
Conan
whatever.
and
Yeah, you know why you put those two names together here, Aaron? Real
Well,
quick, 12 the 36 level, you could just put this in your notes. 1250, same level in Ford. As the 1250 clearing that level. You could probably see some more size in the book though. But yeah, you got the analyst love after the strikes were settled. We'll see. See if people are
yeah.
gonna be. I need a new
So,
car, but I don't know if I'm gonna
hey,
go buy one.
hey, Joel, so do I. Mine's in the shop right now too. But all right, let's move on.
Oh, what do you drive? Stop.
Did
What
you
do you
hear
drive?
about this, Dennis? Do you
Well,
remember
No.
when Spencer a couple years ago he went away and he came back and someone like mowed his car on Detroit side street? Do you remember that or not with
Not
your
really, no.
memory? No, and it totally wrecked his car. So I talked to Aaron getting back on the show, and he's like, "Yeah, I had to take my car into the shop. It could be the curse of the
So
pre-market
what
prep
happened, Aaron?
producer."
I don't know. I got home from my trip. I was out of town for the holidays, and I got home, and my car had been hit on the street, and they didn't
Oh
leave a note or
gosh.
anything. And at first, I thought it was just cosmetic and whatever. And I get in the car to drive it, and like the wheels all messed up, so I had to tow it to a shop. And now I'm gonna have to pay the deductible on my insurance because the guys, we don't know who did it. So
No.
it's a pain, but it's gonna be fine. But I do want to move on from cars real quick because I see some people in the chat asking about Amazon. I've got two stocks right now that are getting impacted by TikTok. So TikTok announced yesterday that it is going to start beefing up its e-commerce sales. So TikTok has a shop within the app that users can just buy stuff directly from the app. And what's interesting is that not only is it bought from the TikTok app, but TikTok then actually it's like full service. They're the ones shipping the product to you. So you buy something on TikTok, TikTok puts it in a package, TikTok ships it to you. It's doing everything. It's vertically integrated. Right now, the US shop, they've started to grow it last year, but they've come out and said, we want to grow this to a $25 billion a year business by the end of this year. So directly going after Amazon's e-commerce business in the United States. Now, TikTok has already done this with Douyin, its sister app, which is basically TikTok that operates in China. And Douyin does like $200 billion in sales of online merchandise in China. So they already have the blueprint. They're just trying to bring it to US. So I think Amazon investors not happy about that. I mean, TikTok has over 1 billion monthly active users. 1 billion. That is like 1/7 of the world. So any type of traction with this US or with this shop that they have in US, I think could actually impact some of Amazon's e-commerce sales. Now, what I will say before I turn it over to you is if I'm a big Amazon bull, look, Amazon already, I'm not bullish Amazon because of their e-commerce shop, right? It's AWS, it's all these other things. So if their sales start to suffer a little bit on the e-commerce side, do I think that's the absolute end of the world for Amazon? No. Is it great news? No.
I just think like worrying about a TikTok coming in and eating Amazon's lunch, I think is insane to worry about that.
I don't
So
think
if
you understand.
Amazon
I don't
is
think you understand
seriously
the
trading
user.
down 2% because TikTok's going to come and start eating their lunch, I think we have bigger things to worry about here. Now, Amazon is trading down here this morning, and Amazon is overbought. And I'm still long Amazon in my wife's long-term portfolio. It's one of the only Magnificent Seven that I still own. Well, I own Nvidia as well. But of the like mega caps, the big guns, like the Apples, Microsofts. I owned Apple, I owned Google, I owned Microsoft, and I've owned Amazon. The only one I kept was Amazon. I don't know. Like it's just had such a run. Could this cool off to 130 to 135 if we really go into this rotation where they're buying drugs and and consumer staples and taking off out some of these higher PE ratios. I mean, Amazon is still trading 38 times forward earnings. It's not a cheap stock. So I think that's more of the concern here is that we just have a little bit of multiple contraction happening here in some of these Magnificent Seven names. Like Apple gets downgraded again. We haven't really dived into that too deeply here yet. But I think, if Amazon is trading down $3 on TikTok, which it probably is, I think it's probably an overreaction, but it's not the kind of stock I want to buy right now.
I have to disagree just in terms of like the scope of what this could mean long term for Amazon. I mean, young people, I don't personally use TikTok that much. I mean, I run the Benzinga's TikTok. That's the only reason I have the app on my phone. But I mean, the user, like how much young people use this app is absolutely insane. So if you have, even a slight percentage of young people that start buying whatever it is, clothes, goods, etc., on TikTok instead of Amazon, that's what people care about the most is having that young demographic of shoppers. Because if you're marketing to people, if you're advertising, you'd rather get someone that's 18 years old that's going to be spending for the next 20 years rather than someone who's older who might not have as many years of spending left. So, I mean, I obviously will have to see how this develops, but if this TikTok shop continues to grow, it's hard to imagine other e-commerce. I mean, are other e-commerce stocks or Shopify getting hit on this too? No, it looks like
Slightly
Shopify's
down. I think you got market effects here too.
Yeah, I mean, I'm not saying it's just that, but I do think every major, you have Reuters, Bloomberg, TikTok. The headline from Bloomberg is TikTok eyes $17.5 billion shopping business
Story of the day
on Amazon's turf. So I mean, it is being kind of like they're targeting Amazon almost exclusively.
Is TikTok still around?
Oh my God!
Is
Joel,
TikTok still around?
Joking.
It's bigger than it's ever been.
This is Joel's joking. So AB, you'll get used to Joel's jokes, but he is being
well. So
you know what? You young kids don't have no money. What are you gonna buy? Cough drops and backpacks.
Can I color this too? And I'm not advocating to go out and just buy Amazon here today because I think we're in a tech correction here, and I think you got to wait until we actually bottom before it is coming in here. But let's give some perspective here. 2023 revenues, and we don't know the fourth quarter, projected to be $554 billion for Amazon. 554. This article is talking about TikTok becoming a $17 billion company. So you're talking there potentially may get 2 or 3% of Amazon's market share. That's what we're talking about here. The potential for them to grow into 2 or 3% of Amazon's market share. And they knock Amazon down 2% just for that today. That's how these algos work. Well, if TikTok's going to come and take 2% of the market share, we're going to knock 2% of the market cap off of it today. So if this was a bull market, I would say this Amazon is a buy, but we are not in a bull market here right now in 2024. We're not in a bear market either, but we're in a correction. So it's a good time to, for headlines to drive price down. Right now, I was even noticing yesterday, it was like everything that was upgraded yesterday, a lot of stocks besides Moderna, weren't really going up. If they were downgraded, they were hammered. And that's, just the indication that we just turned a little bit. We're in a corrective phase, not a bear market, but we're in a corrective phase here. So I'm not coming in buying Amazon here today, but I'm just thinking this is probably an overreaction.
So the other,
go technicals here, real quick here. AB technicals. Well, you have this one low at 43.64. I'm gonna throw that out for right now. I'm not saying that it can't get there, but I just look at this 145 area, just under 145 and a half. I wouldn't be selling into the hole here and shorting this thing down, $3, hoping for 140. Big windfall. You're at 155. You traded over 155 on December 20th. So, if you faded the Santa Claus rally and you're like, hey, look at this. You're getting a nice windfall on that. So I can keep an eye on this 145 area. Pre-market low is 144.85. If you don't take that out early on and start pressing this lower, then I look for a little bit of a rebound. The bottom of yesterday's range is definitely achievable if the S&Ps can turn around, and that comes in at 148.33, riding a 7-day losing streak, looking at 8, but we'll see if the buyers emerge.
So just real quick, the other TikTok story that I teased today, Peloton trading up at one point nearly 10% this morning on news that it is partnering with TikTok to make some workout content, etc. I'm not a big fan.
TikTok market.
Yeah, I know exactly. Yeah, it's enough to move the stock. So I'm not a big Peloton fan, but Peloton trading higher on that news. I don't know how much we really need to stay on this, but if you were wondering why Peloton's trading higher this morning, it's because of that TikTok news. I think we have bigger fish to fry this morning than Peloton, like you mentioned.
I believe, and I've said this before, and I said this when it was 25, 35. I've hated Peloton for a long time, and Joel has too, despite his wife owning it. I do believe. So I don't know the path to get there, but I believe Peloton will eventually declare bankruptcy. So this is just my opinion. I have no inside information. I don't know anything, but I believe eventually Peloton will declare bankruptcy. So I'm not buying anything. Peloton's not going to long-term portfolio. Could it have ridiculous runs? Yeah, it has. Could it go to 5 to 10 before that happens? Yes, it could. I do not think Peloton is going to be. Maybe they're going to be around in some capacities because they're going bankrupt. Doesn't mean the stock is zero. That's why I didn't say I don't think it's a zero, but I do think Peloton eventually goes bankrupt.
Unless it gets
opinion, folks. Just my opinion.
Could be an acquisition target, but
no, we've heard this before, AB.
I know.
We've heard this before, AB, and everybody was like, so it came out that somebody, I forget who it was going to buy them at 35. It was $35 a stock, and it popped like $40. What was that?
Amazon.
It was Amazon was rumored to buy them. We've got to give perspective here, and the reason that I said nobody is buying it was the market cap. So if we go to our trusty Benzinga Pro, and I continue to do this here, and just type in Peloton's market cap, the stock is still trading with a $1.93 billion market cap with $1.68 billion in debt. Who's
Crazy.
Paying $2 billion? It's not $2 million. $2 billion. And this was the argument I gave when it was $10 billion. I was like, nobody's paying $10 billion. Nobody's paying probably $2 billion either. Sorry, folks. I don't think you're getting bailed out on your Peloton by an acquisition. This is just my opinion. Again, people get really pissed off when I get opinionated like this, but you come here for opinions. The opinion on Peloton, which I've been absolutely correct on for a very long time, is Peloton stock lower. So everybody hated me. I actually, when I posted that at 35, so I had the rumor. I just want to give context here. 2 years ago, I had the rumor, I think it was like 2 years or a year and a half ago, that Amazon was going to buy them. The stock was trading $35 and popped to $40 that day. I tweeted out that day that I don't think anybody is going to be buying Peloton, and I think the stock is going a lot lower. And I had 500 messages at me that day when the stock was 40. 500 messages telling me how stupid I am. And of course, somebody's going to buy Peloton eventually. Well, look who's stupid now. The stock is $5. So I ended up being right. None of those 500 people came or messaging me today and saying, "Oh, thanks, Dennis, for letting us know that it wasn't getting bought when it was 40." So I'm going to keep saying it. It's $5 here now. I think you get a pop. You can get a pop. You got a pop in the TikTok news. Sure. I just think pops are to be sold on this stock because I think eventually the stock is going bankrupt, and I don't think anybody is buying this company.
Okay, so we will start banning our first stock of the year on the show. and that will be
Peloton?
Peloton. Yep, Peloton's banned.
What do we ban? We banned AMC because when I said something negative about AMC, I didn't just get 500 messages. I ended up on a Reddit board and I had like 10,000 messages trashing me because I
How
said
dare
something
you.
negative on AMC. So I don't talk negative. I went on Dave Lauer's show and said, I love AMC and I love GME because I don't need the hate, man. I don't need the hate. I'm not buying those stocks, but I love the AMC apes. I love you people. I love all you people. You can't talk negative about AMC, GME. I don't know about Peloton. If you can talk negative, I will find out later today. I'll probably get multiple messages hating me for this. So we'll find out. But these are storied stocks. And when you talk negatively about somebody's stock that they bought at 100 and it's at 5 and they're really hoping to get their money back one day, they hate you for that.
I mean, nothing like a pandemic to get exercise bikes, in vogue. I mean,
oh my gosh, that was such a bubble. That was the bubble
I mean,
of all bubbles.
but
And
you know what the
tried to
thing
tell
was?
Lisa. Joel tried. People give Joel heat, but he has been trying to sell that out of his wife's. It's his wife's account.
It's in her account. It's not in my account.
You've hated it too. You've hated it all along with me, and you warned Lisa about it. But
I've tried to talk to her. Two things. I tried to talk to her when she bought some more. That was like the kicker thing. When she bought some more, I don't even want to talk about the prices. And I tried to explain to her PEs. I almost brought Dennis in on this one about how many Pelotons they're going to have to sell, how many people are going to have to do it. And so when she bought some way up, I said at one point, because we had a great average cost, I don't know, because we bought it actually in December of 19. She goes, I get up at 5 o'clock, go to the gym. She goes, I don't get up at 5:30 to go to gym. I want something better than our 25-year-old workout bike. So we went around, we locked around, we heard about Peloton, we bought it. Then of course the pandemic hit and it took off. But I gave her a stop price. I said, if it falls below 120, we're going to exit. And I don't even know what happened. I think it went to like 140 to 110 one day. And then it popped back up to like 120. I can't remember. Yeah, it must have been right here. And I said, oh, we're back at 120. We can get out. No can do. So that is it for 2024. Talking about Peloton. What do we have, AB? We got 7 minutes left. What else?
Let's bring it back to healthcare real quick, just because there were some headlines we missed on, or not missed on, but we haven't gotten to yet. So when I was talking about, we were talking about Eli Lilly Direct earlier. I did say Ozempic. I know that Ozempic isn't Eli Lilly's weight loss drug, but I use Ozempic like people use Kleenex for tissues. That's just what I call. That's what I call all of them. So I know that's not Eli Lilly's, but we had some news with Abbvie and CVS. So CVS announced that it's going to be dropping Abbvie's arthritis drug from its list of preferred drugs to go with some biosimilar drugs. I don't know if that means they're going to go with the generic version of the drug instead, but Abbvie trading lower on that news. And I know, so Dennis, you bought some Amgen, but Amgen, Abbvie, kind of similar companies. What are your thoughts here on this Abbvie news?
It got hit really hard on the initial move. It was down to 154 and change, and somebody was.
Did you pick it up, Dennis?
Because I don't know. Like, I don't know the details on it. When you're trading news, you gotta have a good understanding of it, or you should stay away. And I don't know how much Humira is, and Abbvie's, and I don't know the repercussions for all this. So it's a warning that I just stay away. So I stayed away. Obviously, the dip was bought. One thing to consider is that when healthcare stocks are dropping right now, there is an underneath demand for healthcare stocks. One, they're defensive. Two, it's got a nice dividend. And three, they've just been hot in 2024. As much as tech has been cold, that's how hot healthcare has been. So you got this dip in Abbvie. They came in and they bought the dip. I still don't know, the repercussions from all this. Obviously, CVS is huge. So, if they're not going to cover this drug, how much revenue potential loss is that for Abbvie here? The market's saying not much here now. Last night they were saying a little bit more. So lots of, balls to juggle and stuff to consider here.
You know what? The reason I thought you bought the stock is because I was flying home and, you get bored. I was reading a book. I've seen all the movies on there. And I said, okay, I'm going to take a look at Twitter. And so I pull up Twitter and I was like, you're like, Abbvie down $5 on this news. And I thought I could just see in there lifting offers. It was because it happened just after the close, correct?
Yeah, and I didn't say it in that. This is the problem with Twitter. It's the context. So you maybe read it that I was being like, this is an overshoot, but I just was reporting. So I just literally reported Abbvie down 5 points on this. So I was
Oh,
like
okay,
letting
reporter.
everybody know why Abbvie was trading down. It was this DJ that tweeted it out. But actually, we saw it in Benzinga Pro too. I just didn't have time to read the filing from CVS. So I was like, on Twitter, they summed it up. This guy summed it up pretty good. So CVS to replace Abbvie's blockbuster Humira with cheaper rivals.
Yep.
So that's a concern. So I was just reporting Abbvie down 5 points on this.
Okay.
I was like, Abbvie down 5 points on this. Are you nuts? I'm buying it. It wasn't like that. So that's a problem with social media. Context, and tone is sometimes hard to convey. So I was actually just reporting on that.
All right, CVS on the other end of this, boom, got a little bit of a pop. Wow, look at CVS on the comeback trail here. In late 2023. Boy, it seems like all these rallies though are absolutely faded. But I guess let's go to Walgreens Boots Alliance here if we're staying on the
Yep,
drugstore.
I was gonna transition from CVS to Walgreens. Walgreens reported earnings this morning. The numbers were actually pretty good, but the company announced that it is slashing its dividend by nearly 48%. And if there's one thing investors like, it's making money, and one way to do that is through dividends. So when a company slashes its dividend, it doesn't matter a lot of times that the top line numbers were pretty good. Although, how we trading on Walgreens, when I looked this morning, it was slightly up, but not really.
Yeah, they pulled the rug on it. Just for me, it's all about holding this gap area from 24.74 to 25. If the Bulls want to defend this stock, that's the area they're going to do it in. If not, look out below. There's nothing but a triple bottom under 23 bucks.
I just don't know why this isn't Rite Aid. That's why I stay away from WBA. CVS is best of breed. If I wanted to own these retail drugstores, I would own CVS, but I don't want to own any of them. I haven't owned any of them for a long time. There's better places to be. I'd rather be actually in the drug companies as opposed to, retail where, you're under attack. We know brick and mortar retail has been under attack for a long time. These CVS, and Rite Aid, Walgreens are on every street corner. And, it's just, is this where we're going to be in 2034, 2044, that everybody's still going to the drugstore to get the drugs, or is stuff going to start getting delivered directly to you? I still believe it's more getting directly to you. So I'm just not a brick and mortar fan. If I look at my long-term portfolio, there are very few brick and mortar stocks in there. I had Kohl's in there for a while, took the loss on it. Obviously, we talked, Walmart, Costco would probably maybe be two exceptions. I don't have either of those, but I'm just not a brick and mortar fan. I still think everybody's getting stuff delivered to them. So I just think there's just not going to be as much need for physical drugstores 10 years from now. So hard to invest here, even though the dividend yield was attractive yesterday, not so attractive here today.
Yep, I've even started ordering more things online through Amazon that I would have normally gone to a pharmacy for, whether that be toothpaste, deodorant. I'm like, well, I'm going to need this stuff anyway. Might as well get like 4 of them from Amazon at the same time.
Yeah.
Before we wrap, I do want to get back to Apple real quick. We mentioned another downgrade from Piper Sandler. Now Apple is trading about 0.5% lower than it was when we started the show.
Yeah.
So Apple leaking even more. This has got to be, I think, like, if you're going to watch one thing today, it's watch this, because if Apple breaks, if Apple continues to move lower, we could be in for a very, very rocky start to 2024. More rocky than it already has been. So, what are we down to, what, 1.25% right now in Apple?
Yeah, we're down about 1.24% here in the pre-market. It's just had the big run from November, December, 165 to 195. So we did the exercise, the 50% retracement. We are actually getting perilously close to coming through that here right now. If we're not, Joel has the tool, so he can just
I'll get it for you here.
Because I don't have the tool there, just sitting there, but. I think that there is an issue here with, the 50% retracement. We're going to get through it. It looks like Joel's doing it right now.
183. Yep.
Yeah, we're through it here right now. So now you start thinking, okay, well, we're through the 50%. 180 stands out like a sore thumb. It seems like a natural bounce area here. But again, this stock is trading, and this is why I dumped out. So if I was really bullish on Apple, I would never want to pay the tax on holding it for that long.
That was
my cost basis on Apple was $25. I sold it last year. My average out was about $175, I think. So I'm like, when I'm actually willing to pay the tax bill, it means I think the stock could potentially go a lot lower. The multiple is just too high. So and again, people are still finding reasons to buy iPhones, and they're going to continue to buy iPhones. It's a cash cow, but it's more of a consumer staple like type of stock now.
Yep.
And yields have come up a bit. I just don't see the reason to buy Apple at 28, 29 times earnings. Apple at 23 times earnings, yeah, let's go. At 29 times earnings, I don't think so.
Couple things here, and I was thinking about this when I was gone, and you mentioned it before I left. People just wait. They didn't want to pay the taxes on this stuff. And I did talk to Lisa about a couple things, and I said, instead of, we didn't have much tax loss harvesting to do. I go, let's look at some things that we may want to sell during the year. All right. And then we could take that money and we don't have to pay taxes on it until 2025 for a year and a half. And she was like, we're not selling anything. And I'm like, okay. I mean, there goes that argument. But, I think that's a lot that, that hit the market these first couple days. And now it's very important to stabilize here in this area. Mark and I, agreed where the support in this was. Second of all, Dennis, we just might as well call this bet off between 160 and 200.
It's back to there. Yeah. I almost won it in October, and you came within a hair,
38
like
cents.
the smallest little speck of winning it in December, and now it's come all the way back down. Do you want to just call it off? We're kind of right here in the middle here, right now. We could call it off. I'll call it off. What do you want to do?
Well, we're having fun talking
about it.
We had one.
So for those who start, I had 160. He had 200. The stock was trading 180. And it got down to 165, and I was, riding him a little bit, saying, yeah, here we go. And then it went all the way up to 199, and Joel still didn't get it. And now it's back here to 182, so it's come full circle here once again. Are we just going to call the bet off, or are we going?
No, we're going to keep it going just because it's good banner, and it just keeps us in focus that
might be a decade before we have resolution.
Yeah, that's what we said originally, and also the importance of whole numbers too. I mean, we never got to 200, but if you're a big institution that says, "Hey, if I could get anything over 195, and that's what you got. You actually got to 199.62, so I missed it by 38 cents. But
you know what I find so impressive too, just with the Apple conversation before we end the show. Berkshire Hathaway owning so much Apple, and look at the stock. It's the mirror image of Apple. Berk goes up every time Apple goes down. So here, and again, it's the value market. So, we know we just buy Berk blindly when we're moving into value stocks. But Berk in 2024 is straight up and Apple is straight down, despite Apple being the biggest position in the Berkshire Hathaway portfolio. Isn't that interesting? Shows how much the market just has, just doesn't care on these closed-end funds. They don't care about the holdings. What they care is we're buying value stocks. Berkshire is value.
Yep, and we talked about that yesterday, that Apple makes up like over 30% of Buffett's portfolio right now. So it'll be interesting to see what it does with Apple. I anticipate probably nothing, considering it probably doesn't want to sell Apple and cause all the pain that would cause in terms of, we talked about it yesterday, Dennis. You said that Apple could go down 15% if Berkshire starts selling. So I don't think it'll do that, but it might not be also adding more. Who knows? But yeah, certainly something to watch today to see if Apple can catch a bid anywhere. I mean, even if it doesn't close green today, get all the way back up. If I can see green off the open for Apple, that'll make me.
No, I don't know. I don't even know if you're gonna see the bottom. I'd be looking for the bottom of yesterday's range. If anybody's trying to scoop this up off the open. Yeah.
I think you got a date with 180.
Yeah.
There was all kinds. So go back, just the old resistance becomes new support trick. So September, we had the brick wall at 180. Got up there multiple times, couldn't get through it. Snuck above in October, and then finally took it out in November. I think that old support old resistance becomes new support trick here. So I do think 180. I think you could bounce there, but I think it's got a date there. I think it's come this far. I think you're buying at 180, 196. I think you're at least $2 too early because I think it's hit 180.
One cautionary note, my iPhone watch is not holding its charge, and I have no idea why.
Really?
It would hold the charge. It would couple years. Don't tell me I need a new one.
Yeah, that's what they do. 3 years planned obsolescence.
Yeah. I mean, I used it a lot. I would use it for swim. I don't know.
Oh, yeah, you put it underwater.
Well, you're supposed to. You just,
I know it's supposed to be allowed to, but
I do the same thing. I do the same thing with mine.
Underwater.
Yep.
Okay,
All right.
let's wrap things up. Dennis, your final words. I'll give you my final words and our guest for tomorrow, and we'll put a bow on it for today.
Final words are just, the tech correction continues throughout this show. We continue to get wrecked on tech here. Mobileye, a main cause of some chip pain here this morning. Obviously, Intel and trading down. Texas Instruments, ADI. So you got a chip wreck a little bit here this morning. I'm not panicking. I'm not like selling everything out of the long-term portfolio. I actually did some buying, but what I bought again was Amgen. You can see I've got this like theme going on here. A little more defensive, potential story stock, kind of just added up. And I took a double size position in Amgen too. So I didn't even take a regular size.
Wow.
I took a double size position in it right off the bat.
Whew.
So let's see, and again, this is not really me to be buying stocks at all-time highs. It's not really my style. But I just think that there's the potential that this stock, if the drugs continue to be a story in 2024, I think this is going to be a sleeper. I think there's going to be a lot more people talking about their weight loss drug in 2024. That's why I put in the long-term portfolio. This is not a trade, folks. Not a trade. Long-term portfolio.
Okay, gotta hold this pre-market low here. 41 and a quarter is where we hit. We hit 41 after hours. Not seeing great support here. So if you want to try and buy the dip here, I'm not wouldn't give it a lot of room. On the upside here, let's see if we can get green at 46.50. I know we've traded up and down and through it 1,000 times, so it's not as a relevant number. Feels like the high of the day is in at about 47.57. So let's see if we can find support ahead of that Fed day low at 46.96.75. Tomorrow we're gonna talk with Ivan Feinseth over at Tigris Financial Partners. My prediction will be he'll be bullish the market, but Ivan always has some good stocks for us. So thanks for joining us here. Glad to be back here on Pre-Market Prep, and everyone have a great day.